Hi everyone, in this video I'm gonna answer the question which one of these three stocks is the best stock to buy right now: Cloudflare stock, Palantir stock, or DataDog stock. I'm gonna look at four different metrics and compare these three stocks on, starting with growth. So let's get right into it. Cloudflare ended its most recent quarterly update with 41.89% revenue growth. However, its growth is on a downward trend. Same with Palantir Technologies at 17.5% growth in its most recent update. It's also on a downward trend in terms of decelerating revenue growth. And finally, Datadog coming in at 43.9%, also on a downward trend in terms of revenue growth. But Datadog with the slight lead over Cloudflare in terms of the best revenue growth quarterly year over year. The next metric I wanted to look at is operating profit margin over the trailing 12 months. And in my opinion, this is a more important metric than revenue growth, because you can always grow revenue if you're willing to sell your product or service at a lower price, right? You can secure as many of the sales as you can possibly secure by just telling your clients that you're willing to offer the lowest price regardless of how that's going to impact your profitability. And in that way, you can grow sales, you can grow customers, and you can keep growing. But at the same time, your losses on the bottom line are going to keep expanding, and that's not a sustainable way to run a business. So in that regard, that's why I think operating margins are important, because it shows me that the company is not just growing at just for the sake of growing, but it's growing so effectively and efficiently. And so looking at that metric, Cloudflare negative 20.63% over the trailing 12 months, but it is demonstrating some economies in scale, going from negative 40% to negative 20.63%. So that shows me that as Cloudflare grows its revenue, the losses are shrinking, and if it continues on this trend, it could turn positive. So it's heading in the right direction. The same thing with Palantir, negative 8.46%, but it's heading in the right direction. If we look back here, it's moving upward. And in fact, Palantir just reported its first ever GAAP net profitable quarter and forecasted that for all of 2023, it's going to be GAAP profitable. It's an example of a company that is growing its top line, but at the same time, that's helping it shrink the losses and eventually turn to profitability. And over the last few years, Palantir has done an excellent job controlling costs, shrinking its losses, and that's expected to pay off in 2023 with its first ever full year of GAAP net profitability. Finally, Datadog's operating margin at negative 3.5%. And unlike the other two, Datadog is not showing a clear upward trend here, right? It moved upward, then it came back down, moved back upward to positive operating margins for a couple of quarters in the trailing 12-month side, and then came back down. So even though it's the best out of these three in terms of the margin, right? Negative 3.5% is the lowest losses among these three. It's not showing a consistent upward trajectory. The next metric I wanted to look at is cash flow from operations to sales over the trailing 12 months. And Cloudflare again showing nice upward trend here, ending with 12.67%. That means out of every dollar in sales, 12.67% of that is turning into cash flow from operations. This is good news. This is cash flow coming to the bottom line. This is the ultimate important metric here to look at sales turning into cash flow from operations. The next one to look at is Palantir at 11.74%, also showing nice upward trajectory here, going from negative 30% all the way up to plus 11.74%. Although over the last 4 or 5 quarters, it's been relatively flat to slightly downward, not showing its upward path. The same with Datadog at 24.98%, the highest out of the three, nearly double that of Cloudflare, and also showing a nice upward trajectory here in terms of cash flow from operations to sales, from a little over 8% to a little under 25%. Finally, I wanted to look at valuation, and I chose to use the forward price to sales ratio for these three companies. And looking at Cloudflare at 15.94, it's the most expensive out of these three stocks. Next coming in is Palantir at a forward price to sales of 8.678. And finally, DataDog at a forward price to sales of 12.12. So, uh, Palantir is the cheapest out of these three according to the forward price to sales ratio. Although if I was to answer which one is the best one to buy, to me it's really close between Palantir and Datadog. They've both done an excellent job of showing that revenue growth is leading to scale in terms of benefiting operating margins and benefiting cash flow from operations. And so I would say it's really, really close. But if I had to pick just one right now, I would say Palantir Technologies is the best one to buy out of these three stocks right now. All right, that's all I've got for this video. As always, I really value your viewership. It means a lot to me. You could be doing a lot of things right now, but you're watching my channel. I appreciate that. Thank you, and I hope you'll come and see me next time for another video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.